What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, internet, I think, is back, so that's good. And I need to go back to my high yield dividend investing strategies. Yes, I invest in Yield Max and Rec Shares and all these other ones, but the purpose is to buy these type of REITs and dividend growth stocks. And these dividend growth stocks, or REITs, have never failed me, and they have been extremely powerful. So I'm going to reveal to you why I have been buying them. So again, they have good dividend growth. They are powerful. They are some of the best REITs out there. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these REITs right now. The first one I've been going after is Public Storage, PSA. I've been buying them. My passive income from MISTI, the Yield Max ETFs, the weekly option income ETFs, it's been buying them. Guess what? They're down a little bit. They were beating the S&P and they were in line with the S&P, and now they're starting to be down a little bit. So this is an attractive time for me to buy them. And they're sitting at 250.58. In the past 5 years, the S&P 500 has been up 88.88%. Public storage has been up 40.82%. It's a buying opportunity for me. This is why I'm reinvesting dividends. My high yielders are hopefully going to be buying shares of Public Storage in the future. The average volume is 975.00K. The market cap is 49.23 billion US dollars. G range is 256.60 to 369.99. That is a frickin' deal. Day range is 277.84 to 282.55. Previous close is 278.89. But we need to look at the numbers. Are the numbers good? Are they congruent with the dividend growth stock or real estate investment trust? Let's look at the numbers. And I like the numbers because the good thing with REITs, okay, they usually increase their rent, which sometimes increases the funds for operation, which helps us as high yield dividend investors or income investors or dividend growth investors. This is what we like to see. We like to see the numbers up. So annually in millions US dollars, 2018, 2,759, 2019, 2,855, 2020, 2,915, 2021, 3,415. I'm just gonna round. And 2022, 4,182, 2023, 4,517, 2024, 4,695. So the numbers are good revenue-wise. Again, we need to look at funds for operation. We need to see how big they are as a company as well. So there's a few good things about them. Obviously, they're called Public Storage. They do self-storage, business storage, vehicle and RV storage, boat storage, and climate controlled storage. So they have a wide variety of storage units, which is nice. Now CubeSmart has their thing, but Public Storage is huge, okay? And I'm going to show you what I mean by huge. Again, I'm going to tell you guys, AI is a great resource. Google, I like Grok with X, okay? That's excellent source with AI finding data. And honestly, I find some data from medical stuff that's also interesting as well, with research and stuff. So it's a valuable tool to find information. So if you guys are investors, take advantage of AI. So this is Google AI. I just asked, how many facilities does it have? Public Storage has over 3,300 facilities. So that's huge. So bigger is better. I'm just going to be honest with you. As of December 2024, they operated 3,073 self-storage facilities containing 221 million net rentable square feet. I like it. But the other thing is, let's look at their funds for operation. Because remember, 90% of what a REIT or a business development company makes 90% plus, or a business development company right around 90% plus, it has to go back to investors. You can even look it up. All right, now let's check out funds for operation. So some good information. They recently released their second quarter of 2025 earnings, reporting a core FFO of $4.28 per share, exceeding the Zacks consensus estimate of $4.23. Also represents a 1.2% increase compared to the same period last year. Revenue also surpassed estimates, reaching $1.2 billion, which is an increase. So the core FFO, 428 versus 423. The revenue is good. The core FFO per share, 428, beat the consensus. That is pretty picky with stuff too. So for them to beat them, and again, it raised its full year core FFO per share guidance to 16.45 to 17. So that's good. The company expects 370 million in development openings. Okay, the price is down. FFO is good. Revenue's good. One more thing is the dividend growth there. So it's a quarterly distribution. 2016, one quarter 170 to 180. And then 2017, $2. It's a little stagnant. Okay. 2021, 22. And there's that special dividend of $13.15. Then it went from $2 to $3. So just be aware of that. Yes, there's a slight high payout ratio. The dividend increases in the last 5 years is 2. But public storage, think about it during a recession, or I'm sorry, not a recession, a pandemic, that may not operate the best. They're starting to make a comeback. The dividend yield is 4.30%. Its dividend growth in 5 years is 12.97%. If you bought one share, you made $12. This is why I'm buying it. Let's jump to the next REIT. Another one I'm targeting is Prologis. It is 105.21. Now, people think Stag's better than it. Just tell them they're wrong and they don't know what they're talking about. The average volume is 4.69 million. The market cap is 97.64 billion US dollars. Its year range is 85.35 to 132.57. Its day range is 104.41 to 105.89. Its previous close is 104.91. Now it's not doing too hot against the S&P 500 since the pandemic, like right around that. The S&P's been up 88.88%. Prologis is only up 0.13%. That is a buying opportunity for me. 100% buying opportunity. Now, we need to look at a few things, okay? They're the biggest industrial REIT out there. So that is huge. So we're going to look at some information with Prologis. Here's some highlights. The second quarter of 2025, the core FFO per diluted share is $1.46, representing a 9% increase year over year. Rental revenues for the quarter reached $2.03 billion. So first quarter core FFO per diluted share is $1.42, a 10.9% increase from the prior year. Rental revenues were $1.99 billion compared to $1.83 billion in the year ago period. The total revenues reached $2.14 billion. So good. The revenue's up. FFO looks good. Let's check out a few more things. Prologis, as of 2025, has approximately 6,000 buildings across 20 countries. Yeah, good luck, Stag, trying to catch up with that. These buildings, which are primary logistics facilities, comprise about 1.3 billion square feet. Prologis is the largest owner of industrial real estate globally. And it's not just Wikipedia, the stats are there. Now let's look at two more things. Prologis reported a total revenue of $2.18 billion for the second quarter of 2025. This represents an 8.8% increase compared to the same quarter last year. For the full year of 2024, Prologis reported an annual revenue of $8.20 billion. This indicates a 2.22% increase year over year. That's pretty good. We got an increase. Now let's check out the dividend history. I'm going to start in 2018, 48 cents to 53 cents in 2019. 2020, still an increase of 58 cents. 2021, 63 cents. 2022, 79 cents. 2023, 87 cents. 2024, 96 cents. And then in 2025, 101. So the dividend yield is 3.85%. I consider above 3% a high dividend yield. Of course, I invest in things way higher than that, but still, I would consider this a high yield. If you bought one share, you made 404. The dividend growth in 5 years is 3.37%. The number of dividend increases in the last 5 years is 5. You're going to get a high payout ratio, usually with REITs. I'm just being straightforward with you because remember, to classify as a REIT, you have to pay a lot of money to investors, like 90% or above, to classify yourself as a REIT. And there's acquisitions right and left, and they appear to be safe with their dividend. So that's good. We got one more we need to discuss. This one is a buy as well, Agree Realty Corporation. This one I consider a rival to Realty Income. Past 5 years, it's only been up 9.35%. To the S&P, 88.88%. Sitting at 75.05 right now. So market cap is 8.31 billion US dollars. So the year range 67.58 to 79.65. So this one is very interesting as a REIT. I'll go over them real quick. So they're starting to build up their properties. I'll tell you the numbers with that. So this is a kind of like a triple net lease. Got a lot of Advanced Auto Parts. Their landlord to AutoZone, Best Buy, BJ's Wholesale, Bridgestone, Firestone, Caliber Collision, Chick-fil-A, Chili's, CVS, Dollar General, DaVita, that's, I'm pretty sure, a dialysis location. A lot of Dollar General, Dollar Tree, Five Below, Fresenius Medical Care, that's dialysis, Gerber Collision, Hallmark, Harbor Freight, Hobby Lobby, Lazy Boy, Mattress Firm, O'Reilly Auto Parts, Ross Sam's Club, they're a landlord to Sherwin-Williams, Starbucks, Texas Roadhouse, that's another one, TJ Maxx and Tractor Supply, 7-Eleven. So you're seeing how well diversified they are, and they have a pretty good occupancy rate. We're going to go over some details with them real quick. So they have 2,422 properties, so that's pretty good. And they're just growing and growing and growing. So we're going to go over revenue and FFO. Agree Realty Corp reported its second quarter 2025 results with the core FFO per share increasing 1.3% to $1.05. The company's core FFO for the quarter also increased 11.3% to $115.9 million. The results were released on July 31st, 2025. So that's good. That's good. AFFO per share, core FFO's up. We're doing good. What about the revenue? So for the trailing 12 months, it's 636.8 million US dollars. This represents a 13.65% increase year over year. The annual revenue for 2024 was 617.10 million US dollars. This represents a 14.81 increase for 2023. Quarterly revenue reflects a 15.1% increase year over year for the second quarter of 2025. 175.53 million. That's good. Now let's check out the dividend growth. Now remember, they became a monthly dividend REIT right around 2021. So 22 cents in 2021. And then in 2022, 23 cents, 24 cents, Then 2023, 2024, 25 cents. Then in 2025, 26 cents. They have a payout ratio of 73%. The number of dividend increases in the last 5 years is 10. Dividend growth in 5 years is 4.99%. If you bought one share, you made $3.07 with a 4.17% dividend.